Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. Friday, the 30th of September, 2022. Futures relatively flat to downish a touch here this morning. Not a ton going on in commodity land. I did see the energy is a little bit weaker. Nat gas is the same. Ags are holding up a little bit, and stat gold was up modestly earlier. I'm not sure if that's the case because I saw the dollar regain some strength. Anyway, U.S. core PCE this morning, month on month up 60 bips versus 50 bips expected, so a little hotter there. The year-over-year number up 4.9% versus 4.7. Fed wants 2, so that's still some work to go there. I don't think it's a real big surprise to anybody out there. Also U.S. consumer spending up 40 bips versus 20 expected, so that's not that's got to switch. It probably likely will, but the optics of that are not ideal. Take a look at Micron, horrible quarter, not over for the semis in terms of downside. They may actually, I say that, but they actually may bottom this quarter. These stocks tend to reflect the changing economic landscape very quickly. They did lower their CapEx intentions, not a positive for semi-capital, so watch out, AMAT, CLAC, and the like. But again, in my experience, this is one of the groups that leads the way, so certainly not buying anything today. I'm going to definitely be watching how these act over the next couple months, and they've got to work off, obviously, inventories in the channel. They've got inventories at the distributor level, the end customer, what have you. Pricing is going to be weak, all that fun stuff that happens now. But at the end of the day, they do go through their cycles relatively rapidly. So there will be a time. The time is not yet, but there will be a time. So stay tuned for that. Nike, inventory is up huge at a time when you probably see consumer spending tick down. Not a great spot, hence the stock down 12%. This is after CarMax and VF Corp, just didn't quite get it done over the last couple of days. So when it comes to consumer discretionary, just say no right now, I think is the move. And now you're seeing the generals, the largest market cap names in the S&P 500, in the triple Q, starting to fall. Apple, Tesla, those two stocks alone are over 10% of the S&P 500 by themselves. They're likely not done going down. So many financial advisors out there have gone to a low-fee passive management type of an approach, which has worked great with an accommodative QE Fed, which we've essentially had since 2009 until just real recently. I think it's time to take a real hard look at what you're doing in terms of active versus passive. Maybe you want to just take a portion of what you're doing and move it over to the active camp. I think active management is definitely back. For someone like myself, it never left. But passive investing from a fiduciary perspective may not be the way to go in this new regime. Just something to think about. Individual stocks will find a bottom over the next 3, 6, 12 months. That's what you pay a competent active manager for, is that type of exposure, that type of execution out there in the marketplace. So something to think about. We're big active proponents. Obviously, we are talking our own cooking. But without question, I think that this is the time. Have an awesome day. Enjoy the weekend, and talk to you Monday.
important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.